Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical stock research on over 5,500 stocks and ETFs, updated daily. With me today is David Blake, CMT, here to discuss last week's market and what we should look for as we head into this week. David, how are you doing today?
I'm doing okay, thank you.
Great, let's jump right in.
Okay, well, boy, we had quite a week last week. A very volatile situation. We ended up making new highs, and we ended up having the Nasdaq one of the worst point-wise day it had in almost a year. So it was all over the place. We're having that parabolic move in the AI and the semiconductor rally. We've been talking about that for quite a few weeks here, and we've mentioned that usually when you have a parabolic move like that, they don't end well. And we saw a little bit of that on Friday after Broadcom disappointed just a tad. And they did beat, which was expected, but their guidance was maybe a little bit soft, which threw some tension into the market. But anyway, we started out, we had some shots fired over in the Middle East. That caused oil prices to spike about 6%. The market dropped pretty heavily to start the week. But as usual, investors bought that dip. And then they got another boost when Nvidia said it was going to expand its chips into Windows PCs. And that helped propel up the stocks back to new record highs, led again by the semiconductors. I think they were up at 1.6 or 7% again last week. So they continue to have that parabolic move up. And today they're even bouncing back. We'll get to that in a minute, though. And then we had another rally in the chips when Marvell Technologies had a big jump. I think it was up 32%. And that was because Nvidia's CEO, Jensen Huang, suggested that the chip maker might become the next trillion-dollar company out there. So we saw a big volume, and the stock, like I say, jumped almost a third. That, again, helped the stocks break out the new highs. And then we had additional support when Alphabet announced through their AI infrastructure build-out, they were going to be buying a lot more advanced chips. Now, one of the reasons we saw this big bounce today is because Alphabet announced that Intel would be building those chips. And Intel, if it was down up almost 20%, I think, on Friday, it's up about 13% today, bouncing back. Okay, after that, on Wednesday and Thursday, we started to see a little bit of rotation during the week into a little bit more defensive stocks. A lot of the healthcare, some of the financial stocks outperformed. And we also saw on Friday, we saw some of the defensive sectors outperform. There's real estate, healthcare, of course, energy again. Anyway, we want to see a rotation in the stock market. We just don't want to see the technology sector drop 10%, get money out to rotate into those other sectors. So we'll kind of watch that. We mentioned last week that we could see investors take some profits in their Nvidias and some of their chip stocks to prepare for this coming Friday's IPO in SpaceX. I know you've heard about it. They're going to come out at $135 a share. That's going to value SpaceX at $1.8 trillion, which is amazing. This is the biggest IPO in history. And it is oversubscribed, which is maybe not surprising with Musk's track record and all. So we'll have to see how that works. But I think that's going to limit, we had this bounce this morning at the open, but I think investors aren't going to be pouring all their money right back into the chips and AI related stuff. I think they're going to probably hold a little bit out for the SpaceX IPO. And as expensive as it is, and as many shares as there are available, I think you're going to see a lot of money going into that IPO. That will probably kind of keep a cap on what we're seeing here today. Okay, the technical condition of the market, it did deteriorate last week as we saw the market pull back on Friday. Let me go here to this market at a glance. There are a couple of things I wanted to point out. As you can see up here, here's the S&P 500, that big drop that wiped out almost a month's worth of gains. Here's the Nasdaq. It was down even more. It did find support down here at the May lows. That's kind of important. You want to see some of these prior support resistance areas, they become support once they get taken out. So we want to see that hold, which it did on Friday. That's basically where the sell-off stopped. That's a good point. And also what we saw here is the advanced decline lines. Here's the New York one. This is more important than the Nasdaq one. But we're kind of having a little bit of a problem right over in here. You want to see the market's going to move higher. You want to see the advanced decline line lead the way higher. Here you see it back off at the end of the March from the war. After we saw the market coming back to new highs, we saw the AD line just going up every day. And now we're kind of struggling back and forth. And normally you'll see this AD line top out a couple of weeks before the market really rolls over. Now, the last time it made a new high was over here early in May. So it's been several weeks since we had a new high on that. We want to see this get taken out if we're going to see more of a move in the broader market, starting to show more accumulation and the broadening of the rally. I'm not sure we're going to see that, but we'll have to see. In addition, we have the new highs and new lows, which have now on Friday, they actually have started to come down where we have more new lows and new highs. Not crazy amount, because if you look at one day doesn't make a trend. And if you look at the actual numbers for the week, on Thursday, we had a new high in the Dow Jones. You don't normally see that if the market's going to roll over here. So that's something to consider. And also in the weekly new highs and lows on the Dow, on the NYSE, it was 285 to 201, which is basically where it's been for the last couple of weeks. It seems to be kind of holding that 200 plus area, maybe coming down a little bit. But the Nasdaq new highs and new lows were 854 new highs. That's compared to the week before where we had a nice week of 858. So just Friday's sell-off didn't do a lot of damage to the actual indicators themselves. So that's something to consider, that at this point, we're not seeing any follow through. When you have a big pullback like this, you want to see a quick rebound. That's ideally what you're going to see, but we'll have to see how this thing plays out. Today, we're seeing a little bit of a nice bounce back in the tech sector. It was up about 3% But again, with this bounce, and the Dow is actually up about 185 early. Now, as I'm talking here, we're down 95 points. The Nasdaq was up almost 400 points. It's up 280 right now. So we'll see how this holds and whether people use this as a little bounce to maybe, if they got a little bit scared on Friday or they're trying to get some money out for that new issue on Friday, we may see them sell any rally this afternoon. So we'll also keep an eye on that. Okay, as far as the technical indicators, we did see them slip back into neutral to some somewhat bearish ground. Momentum is weakening, which is basically what you want to look at. What I'm going to be looking at during the week, and I'll probably mention it in the daily commentary, is you want to start to see whether or not you're going to have negative divergence in some of the momentum indicators. Okay, here's the SPX. And then what most technicians will look at, they'll look at this RSI. Okay, when you start to see the RSI over here, we peaked on this new high. It hit a high of around 70. Okay, now when you're making a new high over here, you want to see that 70 or above. If you start seeing the new highs come in lower than the previous high, that's one of the signs that most technicians will trigger right away. That negative divergence means that, okay, we're making a new high, but we don't have the oomph behind the market that looks like it's going to continue to make new highs, and that's really a red flag. So we'll be checking that this week, especially if we start to bump up here and start challenging new highs again to see whether the momentum is going to hold up or whether it's going to start showing that negative divergence, which would trigger probably more to the downside. Now, underlying breadth last week was weaker. We saw that a little bit. That's because of all the selling on Friday. That's a little bit of a confirming that we saw a lot of distribution on Friday. Before that, it wasn't too bad. New highs, new lows, like I mentioned. They're not really signaling that people are dumping everything and trying to get out of this thing. Investor sentiment remains mixed. We're seeing the retail investor kind of just holding in there at their historical norm. Historically, we have about 37.5% of retail investors are bullish. Last week, we were at 36.3. So, right around the historical norm, just not too much. I think a couple of weeks ago, we were up in the 40s on that. But then we did see a little bit of a pullback in the hedge funds. The National Association of Active Investment Managers Exposure Index dropped it back to 86.8, and it was 98%. Basically, they were all in a week ago. So they got a little bit cautious with this fragile Middle East ceasefire. We'll have to see how that's going to hold. Today, we got an extra little boost when Iran said they're not going to retaliate on Israel for now. So we'll see how that holds. But again, one day doesn't make a trend. We want to see, it's very important today, how this thing finishes. I'd like to see it maybe even finish near the highs. Today, we got a little bit of a bounce in the chip stocks from Intel after that report that Alphabet was going to use the company to build its chips. It was up 13% a little while ago. Tomorrow, we have existing home sales for May. We'll see how that's coming out, see if we're getting any more life in the home builders. And then on Wednesday and Thursday, we have Oracle and Adobe coming out with earnings. They could move the market, especially to the downside if we see more weakness in some of their AI business. And then on Wednesday, we also have the CPI coming out for May. Now, at this point, they're looking for a 4.2% year over year jump. That's way above the 2% level that the Federal Reserve is looking for, but that's expected because of the high prices in oil. Core CPI is expected to increase about 2.9%, and that's compared to 2.8% the prior month. So not a lot of movement in the core position. The core position takes out the energy and food. So of course, that's where most of the people see inflation rising up, but they don't include that with the core CPI. Okay, then on Thursday, we'll get the SpaceX pricing at $135 a share, and that'll start to trade on Friday. And also Friday, we will get the consumer sentiment report for June. We'll see how that goes. That'll be the prelim for that. And I think we're going to be limited on the upside because, number one, they want to kind of check out that CPI report midweek. But I just think you have too much money going to be eyeballing the SpaceX IPO. Normally, you wouldn't see a whole market be on hold, for an IPO. But this thing, the size of it, now it is oversubscribed, which means that when something's oversubscribed, normally it's going to open up higher. In fact, my projection on it would be that it'll probably go from 135 to maybe as high as 180. It's just, from my experience, what I would expect. But then again, you could see after a couple of days, see it pull back. And a lot of these things, sometimes they jump up like that and then they immediately drop. But again, this is going to be a different beast with a lot of employees and a lot of retail clients able to get in on the IPO. So if you're buying it, good luck. And I certainly wouldn't pay double the price or anything for it, but it'll be fun to watch. It won't be included in any of the indexes. I'm glad they kind of held back on that. They want to see how some earnings and stuff come in on that because it's going to be very volatile for a while, which could affect the Dow or the Nasdaq and that kind of thing. So, okay, one last thing before we wrap this up. I do want to take a look at the Fibonacci retracements on the S&P 500. As you can see on here, we basically came right down to the 38.2% retracement, which is another level of support. I'm sure if you look at these things, that's where you want to see something stop. That's the Fibonacci retracement levels that a lot of traders will watch. They want to come in. If we take out that last week's low, then you're probably coming down to at least the 50% retracement. You can put these on the smart charts. You can put your own Fibonacci retracement levels on these things to kind of keep an eye on them and see if we hold some of these support levels. And if you have any questions on some of these things we talked about, certainly you can send me an email. And that's all I have for this week.
Thank you so much, David. As David said, if you have questions for him or anyone else on the MarketEdge team, please feel free to reach out by emailing support@marketedge.com. Don't forget your first 2 weeks of unbiased technical analysis are free at marketedge.com. That's it for this week. Please like and subscribe if you haven't already. It really helps us out, and we'll see you next week.